So as I earlier said, in this video we are going to break down the 3 steps on how you can take this type of trade every single day. So on this 3 step, I'm going to break it down step after step so you can understand how you can take this type of trade every single day with this strategy. So firstly, I'm going to start with our indicators that we use in this strategy, and mainly we are going to start with the main indicator, which is direction. How you can find our direction of the day. This is the place where people find it difficult, especially newbies. They find it difficult to get. They may know what you're looking for or buy or sell for the day, but they don't know how to get it. So if you want to do that, go to indicator tab, search for this AMA 20, 50, 100 and 200 by Dr. Sweet. Add it to your chart. It will look something like this. If add it to your chart, this is not how it look. This is my own setting. It looks something like this. If you check, this is how all of them will check, and this is how we look. Then if you want to set it, go to your setting and you move the 20, which is the first one, then add up the 50, the 100 and 200 like this, and set it. This how it will look. It will look like my own, or you can pause the video and screenshot it. Then once you have that, the next thing is for us to know what we are doing, which is whether we are buying. With our directional bias now, we will know whether we are buying or selling. So in the scenario of buying, we have the 50, which is here, the green one is greater than the 100, which is the blue one here, which is also greater than the 200, which is the red one here. That means you're looking for buying opportunity. So in the scenario like this, we're looking for buy. Then I'll also show you in the scenario that you're looking for sell. Okay, in a selling scenario, we are using this US 500. This is how it will look like. The 50 here, the 50 here will be less than the 100, which is the blue one, and the 100 will be less than the 200. That means we are looking for selling opportunity. That means we're looking for selling opportunity in this scenario. So have it in mind on how we can get those things. So let's go back to our chart and see how you can trade with this strategy. So this is the trade case study that I'm going to break down. Firstly, we're going to find our direction. This is how you can find it. The 50 here is greater than the 100, as we earlier know, and the 100 here is greater than 200. That means you're looking for buying opportunity. So I will remove the EMA, so it will be clean, the chart will be clean, and I will remove that for simplicity, but have it in back of your mind that you are looking for buying opportunity in this scenario. Then once you get your direction, the next thing you do is for you to mark your liquidity. So you get your liquidity. Probably we trade the Asia session, New York and London, but the Asia will not trade during that time because it's midnight, while during the London and New York is when we trade. They mark a liquidity. Probably we use this Asia session as our liquidity or pocket of liquidity. So we mark our liquidity which is below the Asia session because we're looking for the set side liquidity to be taken. Then we look for entry model. You mark it out like this and wait for the sweep to occur. And also you mark your London liquidity if you want. As you can see, this is London. We don't trade, you don't take any trade because London was not able to sweep the Asia. That means you don't have any trade during that day and during that period or time. For this scenario, the sweep occur during the New York or after hour of London. As you can see, before London open, the sweep occur here. So once you mark our liquidity, as you can see, the sweep occur before the New York open. So this red candle here is what sweep the liquidity, as you can see. But let me show the red candle. This red candle here is what sweep the liquidity here. Then our confirmation will be during the New York session or during the session. So we wait for our confirmation during the session only. Then next, once we have the sweep, as you can see, the first confirmation you have here is the first bullish candle. Let me zoom in. You can see it. This is the first bullish candle we get here, but what you can see is that the next candle break below that candle. So that means we are now looking for our confirmation here is not valid. Let me show you what I mean by that word. I mean, this is the first bullish candle. They mark the high like this. That means we are waiting for the next candle to trigger you, so it will be in the market. But what happened here in this scenario is that, let me say you place your order here, you place your order here. What happened is that the next candle break below the first bullish candle. That means you wait for another confirmation, you wait for another bullish candle to occur. So you move your order. and you wait for another candle to present itself. As you can see, this is the next candle, which is the bullish candle that come up. Then what you do is that you carry your marking, also go back to the high of that bullish candle. The high of that bullish candle, even though the bullish candle have wick, no problem, mark the high, and in that place is where you put your order buy limit in MetaTrader. And also this is how we put it, like this. You carry your order back to the high of that candle, then you cover the low that sweep the liquidity. You cover the low that sweep liquidity like this, and after that you target 1:2 reward ratio only. You target 1:2 reward ratio probably. So this is how we take this trade every single day, and you are not micromanaging this trade. So if you want to learn how you can trade this every single day, join my community. The link is in the description, and also have a free community. The link is also in the description. So this is how we take this trade every single day, 1:2. Bye bye.